Hi guys and good evening. It is Friday the 18th of August 2023, 10:31 p.m. London time. So it's been a very long time since I have come live for a market review. Haven't felt like it was the correct time to send out a macro analysis, but that has changed on the back of the recent volatility that has opened up for the markets. Today is going to be a fresh review covering all the things that I think you want to know as a trader or an investor on the subjects of decision making, on the subjects of where are we in the either bull or bear market, what does this current move mean, where are we placed compared to previous cycles, what happens if the previous analysis is wrong, how are most traders looking at the market, what am I going to do with my capital, and what am I doing with my capital, and other useful questions and answers for today. Before we begin, and before I look over the topic matter with you, I want to say that today I will present not what I want to see, but what is factually correct and what I do see. I will do my best to be honest and as succinct and simplistic as possible, whilst giving you a clear idea of how to digest the market in its current phase. All right. So with that said, this is what we're going to go over today, right? So I've been looking at the markets 3 times today to make sure that I was digesting what I saw properly. And we have 3 things to cover based on the back of that. So the first one is we're going to look at BTC from a macro chart analysis. And we're going to look at where we are looking into the past cycle comparison. So it's just a follow-on from a lot of the work we've done previously. After that, we're going to zoom into the area of interest, which means to zoom into this local price action, as you will see. Next, the signal to buy BTC. So what am I looking at to add BTC? As you know, the current criteria is I do not buy anything over 21k, but we can expand that out now. Potential targets for this market in general and the manifestation of FUD given our recent volatility. We're then going to look at BTC dominance and USDT dominance. And before we go on to the strategy and musings part, just going to clarify where I would expect the market to trade if we are wrong or if I am wrong in my thesis. Next, strategy and musings. So this is just general thoughts about the market, general execution thoughts, general goals, and really setting the sights, locking in on the site for the next 400 days so that I personally don't lose my way, and perhaps you will not either. Lastly, we're going to look at alts, total 2, total 3. I'm going to show you what I'm looking at, the common setup on a macro level, and just going to look at how the market is being ruled with a few examples of alts, and we're going to look at Ethereum. Okay, so it's going to be a deep dive today. So if you are watching this from the US or the UK or wherever you're from, get your tea ready, get your coffee ready, whatever beverage you like. Pause the video here and then we're going to begin. Right, so I'm going to copy this onto the next slide. Okay, so let's begin this now. So, if you've been paying any attention to the rolling analysis that we've given out for the past, I would say, year and a half, I've been using this chart that took me a long time to construct when it was first done, and it's been the leading chart that helped me acquire spot at the bottom and assess previous cycles. Okay, we're not going to go over that in too much depth, but I'm going to point out a few things. Right, so the first thing I want to point out is that I still believe this bottom here is the macro cycle bottom. This is because it fits every metric that I could have hoped for, including sentimental metrics such as the FTX crash, but metrics by time, as we previously went over. It was kind of the average time for a bear market. Price action, you had we had a distribution here, a sell-off, and then a move, market structure break back above that sell-off region. The rally before halving fits in terms of time, and the way the market sold off is very similar to how it has done in previous cycles, with basing out and a capitulation, basing out and a capitulation. Okay, so now that's pointed out, I next want to show something that I found earlier on, and this is very, very interesting. So of course we don't have that many cycles to compare this cycle to, right? We don't. You can look previously and you can say we have had 3 cycles. That is not an awful amount of data to carry everything forward. That being the case, it is the only data we have, right? And give me 2 seconds. I need to shut the window because the rain is coming in. 1 second. Okay, so given that is the case, we work with what we have, right? And so far, the previous cycles have given us an idea of how the markets in general like to move with crypto, yeah? So I'm going to continue to use that to draw a correlation between 2 areas. Now, this correlation I found earlier on when asking the question, where are we in the cycle, right? If we've bottomed, if you agree that we've bottomed right here due to a market structure break and all the other factors, do we have anything in the previous markets to compare this to? Now, we do because we usually have a big rally followed by a sell-off, right? Big rally followed by a sell-off. However, this last cycle seems to be very different to this cycle. The reason being is because the last cycle we put in a massive pump, like a huge pump. Then we had a big retrace. If you look at the current price action, you would, yeah, it's up a lot by traditional standards, but for crypto standards, this is not much, this pump, yeah? So let's look at this objectively. The pump we've put in since the lows has been around 100%, all right? If you look at the previous cycle, after the bottom came in, the pre-halving pump was 355%, all right? So I was looking back at the cycles thinking, is there a comparison to be had here? And yeah, we have a comparison. And the easiest, best comparison I find is from the 2015-2016 cycle, right? So if you look at the bottom here, we made a move up of around 100%. That move, even though this looks different in terms of price action, that move from the local high to the local low was around 39%. So we put in a similar move here, right? We put in 100% and we retraced. I feel and I think something like that is going to happen again, right? Because it's just very, very strange how they align, yeah? So the 100% move. And in terms of most of the parabolic action, right, happened after that moment, right? So the parabola happened after that moment, not before. Whereas in our last cycle, it happened here, right? So at the moment, right, if I'm comparing all the cycles I'm looking at, if we're going to manifest in a bullish way, I believe that this is going to happen, right? We're going to form a higher low here, very, very simple, and then go parabolic fairly quickly. Now, that parabola, where am I expecting it to top us out? I've commented on this before and the same applies. We have a descending structure of pre-halving pumps, yeah? So 460, 405, 343. It's quite clear that this is descending by around 60%. So if we were to say, okay, where should we get out and where would we get out? Should we have a move higher? We're looking around the mid-50s, yeah, for a take profit across the market. So that was the second point that I wanted to draw out with you, and it was highlighted in some of the notes I put here. So, we'll zoom into the area of interest in a minute, but potential targets was something I wanted to cover, and that is definitely there, right? And so we'll zoom in momentarily, but I wanted to just touch base on this macro chart to show you how I'm thinking about it. And I did compare these two things, but I gave you a disclaimer that we don't really have that much in previous cycles to look at. But every single cycle has acted in a similar way, right? We've got a pump and then a retrace followed by parabola, right? So here was 223, and then this was a 41% retrace, okay? Here again, this was 300% followed by a big retrace by 70%. So whilst they differ, obviously the rally, the moment before we start rallying, before the halvening, usually follows that, yeah? And that's, that's the same as any kind of low that occurs. So usually in a downtrend you get this, you get an initial movement, and you get basing out of many different types, and then that basing out usually moves higher. Or we raid the lows, which we will talk about in a moment, okay? So those are the two manifestations of how a chart moves out of consolidation, and that's all we're really looking at right now. So to get a clearer picture of this, we want to zoom into this area. So let's now look at the Binance chart to look at that. Right. So as you know, I have been publicly and privately bearish on BTC ever since we took this high here, right? So what we find is we find a local uptrend and we smash. So we formed a bottom here, constant buybacks. We have a descending wedge forming here, and then we have a massive one candle pump, right? One singular candle. We struggled to get back over this area. So we've rejected from this area 3 times. We formed a weekly Sir Lancelot here, right? We've bled, and subsequently we've moved down. From here, I was hedged, and the reason I was hedged is because, this is just a failure of a trend, okay? We had the same thing that happened above here. So for me, this local trend is exhausted. This entire up move is exhausted, right? So the question from here that we need to ask is, all right, well, if that is the case, if I'm correct, which I will hold in around 90% certainty at the moment, where do we expect a retrace, or how do we expect a consolidation, right? And where do we expect this to be taken? Well, what I'd like to do is I'd like to just say to you, if this was a shitcoin chart, what would you expect from this, right? What would you expect? And intuitively, when I look at this chart, I would expect this level to be, this key level to be retapped. It's like a magnet for price, yeah? 21,830. That is off base what I would expect, right? Because we have a feeling of this inefficiency. All of this inefficient price action here has been filled. And the only area really that we haven't filled is this, yeah? So 21,000 to 19,000, okay? So if I'm looking for a retrace, that is exactly what I would expect. There are 2 other scenarios, but again, time will clarify everything. So where uncertainty, blossoms, time is required for us to get rid of that uncertainty. But there are 2 things, and we'll look at this in the inverted in a second. But the first one is that we could swipe this, right? We could swipe this area and then come back, right? And from this swipe, we can do 2 things. We can form a contraction, or we can lose structure again and go lower, right? So this is why I say we need time right there, time right now. This is also the advantage of being in here and in here, because you don't need to worry about the intermediary action, understand? These areas are a little bit more difficult to trade than the extremities. So yeah, in general, that is what I see. I do see some kind of knee-jerk reaction happening below 24,000, and I do think this will be hunted. But from there, we will have to find out what happens. My bias, okay, so if you want an opinion, my bias is that we do go down to here, and I'll tell you why momentarily. It really is a cross-correlation between alts and Ethereum, and BTC dominance and USDT dominance. But in general, I think that because we had such low volatility, and historically when this level of low volatility finally snaps, it doesn't stop, right? So we've had such a wind up in this range. I just believe price action is destined for lower. Even though we did have enough liquidations just to mark a bottom yesterday, I'm not seeing anything solid right now, especially on the premium. So I'll have to wait on that one, right? So that's the local climate done, and that's as far as I'm going to go into the local climate, which covers the daily and weekly. But the overarching narrative here is this is bottom. This is a bottom, and this is a first wave cycle. So we're really now looking for where this essentially bottoms, which could, again, I'm going to repeat it for a second time, be as a contraction, or it could be as just a trickle lower. Time will reveal, and I'll factor that into my to me sharing about my execution in a moment. Okay, so then if we look at other stuff, we're now looking to ask another question, right? Where is the signal to buy? So if you're not in, if you're not in BTC, not in altcoins, and in general you're wanting to add to your bags, what's the signal to buy? And that's very, very easy. Okay, so I'm going to cover that right now. So if you know anything about conflict of interest and how price moves and how people sell obvious levels, this is how it happens, right? What happens is people scream, I want this area, right? They scream, I want this area. This area comes. Premium at this area shoots up, indicating that there are some pretty large pockets accumulating this area. At the same time, you see a flurry of news events that generate the liquidity for these people to come in and buy, right? So news events such as Binance banned in all countries, Gemini Exchange, Coinbase Exchange capitulation, something of such a large degree that it makes people who said, I want to buy here, not want to buy anymore, right? And so it reduces their ration and turns something valuable for them into something non-valuable, and it divorces them from the perception of value. It gives them momentary amnesia because they believe that the entire thesis has now changed, and it actually hasn't. So you're looking for FUD, right? But very, very strong FUD, high premium, and then you're looking for a logical value level to occur. It's really that easy. It doesn't need to be overcomplicated. So I will be on the lookout for that, as I always am. The same thing that happened in these previous areas, here, and here, right? The game just has to be inverted at all times. Now, whilst I did take some longs here myself in this higher region, I've been saying to you all for a long time that this is looking like it's a top. Yeah, go back to the previous videos. I was thinking perhaps we could consolidate here for a while, but that hasn't happened. So that's the local price action covered. Now I want to just extrapolate that signal to buy. I'm not going to be conducting any buys above 21,000. Okay, that has been my reigning rule, and I will stick to it. That was the advantage of buying here initially. I'm happy with that. I will keep that. If we get below 21k again, I will buy. It's very, very simple. I may consider a long if we get a wind up, but for now there's nothing. I have no interest in buying any kind of BTC or doing any kind of long. So then the last thing to cover with BTC is what happens if we're wrong. Okay, what happens if I'm wrong? So if we go back to the macro chart, there's one missing link that hasn't been fulfilled, right? So if you look in the previous cycles, let's go back to our days and retraces. So retrace on this market was 86.9%. This was 84%. Our current retrace is around 77%. In order to fulfill this similar movement, we would need it to go around to 81, right? That would be a dip to around 13k, which would basically fill in this area. Here, okay? It'd fill in right to here. And that would be viewed as a triple rate, so 1, 2, and then 3. It's possible, and that's what you have to be prepared for. If that is fulfilled, that is, I'll be putting a significant amount of capital in that area, but that's the lesser possibility for me. As I've tweeted also, and as I've told you guys many, many times, news outlets will lead the way. They will tell us everything we need to know. This stuff will get context by conflict of interest, okay? So if you see conflict of interest here, firms trashing it, ETF, delayed, whatever, yeah, that's the signal to start acquiring more. If here it goes hyper bullish, no, that's not how it works. That's not how the game works. It's never worked that way. So be very, very careful about buying into narratives as they occur. You know, there was a reason why BlackRock started to endorse up here. Yeah, there was a reason. Right, so let's move on to the next subject. I hope that's clear for you. It's a bit late here, so perhaps I could have said that more clearly, but I'm doing my best to present that to you. In short, I'm not worried about trading this still, just looking for a lower buy. I'm expecting a higher low around the 19k area, and there's a possible that this squeezes and reaccumulates, right? And if it does, then the edge of that triangle will be an explosive movement for my portfolio, because I'll be longing the back end of that. If you look at this lastly from an inverted view, or at least a monthly, that looks like bottoming price action, right? But there is a lot that can go wrong within this area. As I said, if you look at this from this view, you could, for example, take that and then consolidate and then just continue down, right? So time solves everything, right? Time solves everything. And in general, you know, you could say that there's a market structure break to the upside coming pretty soon, yeah? So we've had a low raid and we've had a break of this lower low series on the inverted. So it's basically a market structure break. You know, as soon as we get that higher high, it's possible, right? It's possible. So let's move on to the next piece. Okay. Seem to have lost my Okay, well I have it off by heart anyway, but I can go back and get. Oh no, it's back. Okay, no, it's back. So next is the strategy I'm using. So this is sentimental points from me to you to help you keep focused on the thesis in general, or my thesis and the thesis that many of you share. So the first point I want to say is that, you know, once a bottom is in, what I have seen, okay, and this is from 4-hour setups to monthly setups, is that the setups are often clear, right? The setups are often clear. The danger is in staying solvent, okay, which means mentally patient and having capital to apply. Solvency is the danger, right? You know, being alive and being able to wait is a very difficult thing, because you have to be just chilling through price action that is tempting you, and chilling through outliers, and chilling through bear market wizards, right? Very, very difficult to do, right? Picking the setups is the easiest thing. If you look at some of the altcoins I'm going to show you shortly, you will see that the setups are excellent, but you will also see it's going to take a lot to sit through them. The next point I want to make for you is that, you know, my strategy is simple here. It's very, very simple. I'm simplifying everything. I have buy below X, sell above X. That's it. That's literally it. Underpinning these 2 points is that the general thesis is that within the next 400 days, we start to cycle up based on the macro analysis I've done previously and the previous cycles, okay? Next, I'm sticking to projects that make the most sense. So most capital is being allocated to projects such as Illuvium and infrastructure projects, and projects such as Rollbit and others that make the most sense, that have the most gas behind them. Gas means development and community and liquidity, right? It's 3 things: development, liquidity, and community. Now there's a lot of on-chain stuff going on, and I'm very happy for everyone making money on that stuff. But me personally, with the investing, I'm sticking to stuff that has liquidity, right? I'm sticking to stuff that has liquidity. Now the potential narrative switches that I've highlighted here, I just mentioned the on-chain stuff. We're going to have to watch the centralized exchange versus decentralized exchange narrative, because if this on-chain trading starts to cement itself even further, it may be that all the gains go on chain. Okay, during bear markets we always have these lower liquidity pumps. This always happens, right? This happened in the last cycle, but it's more prevalent in this cycle, and it may be indicating a switch, okay, from centralized exchanges to decentralized exchanges, which is a narrative we've been looking for a long time. Eventually it will come, but we have to be mindful that is that where the next major alt seasons are going to occur. They have occurred right now, but we're talking about things that have moved from 100k market cap to 50 million market cap. That's not massive liquidity. The only thing that has had extreme liquidity move into it is Pepe and Rollbit. And Rollbit was slightly on chain, but it isn't part of the bot narrative quite yet. Yeah, so we're just keeping an eye on that for now, and perhaps it will switch, but I'm not convinced quite yet. The next thing I want to mention here is that if you are trying to buy, right, and if you're trying to hold, you need to just accept the risk. Okay, there's nothing else I can say to you there. You're gonna have to accept the risk. Anything that you invest or that you trade, just check it off, right? If you're using the same thesis as I am, right? If you're using the same thesis, you have to accept to lose it, because that's the only way you can hold it. And the last thing I want to comment on this strategy and musings is that my targets are thin in comparison to the last few markets, right? If I 10x all the capital I've put in, I'm more than happy. The reason being, as I've highlighted many times, is that I believe the saturation of greater fools in crypto is coming to an end, right? And I think that if we get some kind of mass adoption by BlackRock, or BlackRock signals retail, or something happens where it looks like the entire market is going to 400k, I really doubt it. I will be out of the market. I will be out of everything if we hit 55k again. I want to make that 100% clear. That could change, but future information has a very good way to throw us off a good strategy. Yeah, and much of my strategy relies on looking at game theory and liquidity, and I still do not believe, even if we start to trend up from here, if we hit 55,000, I don't believe there's enough gas in the system for everyone to get out a profit and for the whole thing just to explode. I mean, who are we going to sell to at that point? Like, that's the question. Who are we going to sell to? Are retail going to come back, and why are they going to come back? There's so many questions on the liquidity space that are unanswered, but I do believe we have enough gas to at least get us back to a bearish retest of this previous high. Okay, so that has been covered in many reviews, but I want to say that with absolute clarity here. So let's move on to the last bit of the video, which is altcoins. So I'm going to run through total 2, total 3, and I'm going to just tell you the reigning thesis on alts, and then we're going to look at Ethereum. So very simple stuff here. Total 2 is ranging, right? Most crypto charts are ranging, and we've been ranging for a significant amount of time. This represents the Ethereum slant on the market, because total 3 is Ethereum excluded. Current ranging is now 434 days, right? 434 days. In general, there are very two easy signals here. One, we rate this low. Okay, and then that's the low end for me, because this is a range discount has been run, so you're looking for that low to be run, and then in whatever type of candle you want. The candle doesn't matter, but we want to reclaim that area, and then I think there'll be a swift move up from there. If not, then we have a very simple marker, very simple marker, and that's a descending slope, right? So you're looking for whatever price action manifests around this area to break above that descending slope for a chance to allocate capital into basically everything. Total 2 and total 3 is going to be used as the barometer, as it always has been. And I say that because it's very, even myself, when I'm looking at the markets, I get very distracted when I see outliers moving. But if we look at total 2 and total 3, they're not representing the same price action. So it's very important to keep in mind that if we're trading outliers, they are outliers. yeah, and not everything is going to follow them. So here also is a key level on the monthly chart, and I think that with these untapped lows and what I will share about Ethereum shortly, I think that the market is coming for this area. Okay, if BTC follows the trajectory that I had highlighted for everyone briefly, you know, that would be enough to send us to this area. A 25% movement down, it'd be more than enough. All right. So, you know, I'm expecting that to be a BTC-driven event. But again, I'll look into that with Ethereum in a moment. I just want to go on to Total 3. Total 3 is exactly the same, in exactly the same space. Now, we have rated a low here, but we're still forming lower highs, right? So we haven't broken out of this descending wedge. So, very, very simple. We have two lines here, right? Very, very simple. Okay, and then we have a key level or a key area, which is a previous 2017 high here. So we're looking for A, this level to be run here, okay, or B, a completion of this wedge and a breakout higher. That could be a liquidity event, it couldn't be, but it's one I'm looking and happy to long. Very simple stuff. It looks simple, sounds simple, but it's not simple to wait through it all. Let's now move on to ETH, and drum roll, ETH looks terrible to me. It has looked terrible to me for a long time. You know, this just looks like one massive bear flag until it doesn't, basically. So you just have these grinding higher lows, and then you have a key level just been run here, right? This is precisely the reason I was hedged on this, because whilst most alts have reaccumulated in a more flat structure for however many days, this is just grinding higher with this awkward price action. Forms a very strong raid here, and it has untapped lows right here. Okay, a lot of crypto Twitter as well very bullish on Ethereum here, and it doesn't make any sense to me. It makes no sense to me, especially given that, okay, yes, this could be gearing up for a breakout, but it's still trending lower, right, within this range. So if you look at ETH BTC, again, we have the same price action on this. We've swiped a high, we've swiped a low, and then we've come to form a lower high, and we're stuck within this range. So for me, it would make sense for us to move down a little bit further and just base out to see what happens. If that occurs, you're going to get, you know, even a small spill in ETH BTC is 10%. You stack that on BTC's 25, 26% retracement, you get a pretty savage sell-off for this, right? So if you look at this, it's around 48%, yeah? So it can be made up. In general, I'm going to be trading to around 981, which is where I will unwind my hedge. But I'm really not, I just don't like this chart. I can't find anything bullish about this chart. Perhaps if we get a consolidation again via time, I can change my mind, but there's nothing bullish here for me, guys. Absolutely nothing, right? So, with that said, let's move on to a few of the last points I want to cover with this video, right? Right. So ETH chart is done, sloping diagonal done. All right, all this is done. Okay. Talked about how the market is being ruled. So now we just want to give you a few examples of alt charts. So I'm going to do this impromptu. I'm just going to look over a few lists and cover some ideal setups. So the ideal setup is mirroring Total 2 and Total 3. It's this, right? All right, we have this accumulation region. We're looking for these lows to be run. Very, very simple. And in case the lows are not run on certain setups, I'm not just accumulating below the lows, I'm accumulating in this region, right? So if you know anything about the discount lessons, the range lessons in the tier 7 course, I am accumulating at a discount and at an extreme discount, right? So these are the two areas with more heavy weighting to this area in case I'm left behind on some setups of interest. So I've covered this a lot previously, but yeah, an obvious one here is Illuvium, which again may or may not do that, but one of the scenarios I gave for you all was for this area to be run in red. Yeah, this area here. It's possible, and if it is, I will sink more capital into it. But as you know, I started to accumulate around the $40 region, around 43, 44, 42, 39. But the bulk of my capital was still waiting for red, and I have enough to, whereas if it started moving now, I would be happy. Next ideal chart, and which is an obvious chart, is the one I tried to trade recently, but it's a great example of something stuck in a doom loop range, right? Those lows are run, that's a big smash up, okay? Let's look at some other charts. I think I saw FET earlier on, so, you know, this is one of those that I'm dubious whether it runs the lows or not. And this is one I'm going to be acquiring pretty soon because it is the leader of the AI pack, and it was definitely one of the strongest in early 2023, late 2022. Okay, so early this year. So that's an example. Let's look at some other charts if we can. Render is another example of one of those strong charts that I'm not going to be looking for a low raid. Discount is good enough. And then let's just scour these. Floki, yeah, so same with Floki, yeah. Right, acquiring small bits at a discount. If it goes below there, I'll ape in pretty hard. And then the other charts we're looking at are ones that are forming massive falling wedges on macro time frames, okay? So I don't want to cover too many charts because they're all looking similar. Yeah, you either have falling wedges, ranges, or those where I'm dubious we make new lows. Yeah, or those where I'm dubious we make new lows. In general, the thesis is simplification. So I'm not looking to be complicated on any of these charts, and I want to say it 500 million times until you guys understand that. Yeah, I'm just looking to buy at a good price where the risk to reward is high, because the thesis, sorry, I said that 3 times. The thesis for alt here is not, oh, I want to get this exact price. Yeah, the thesis for alts is, what risk to reward can I get with a stop at 0, and a target that is not glamorous. Right, and if you're looking at, you know, a stop at 0 with an 11R potential without compounding, with the ability to upgrade a stop on a breakout, yeah, that's huge, that's massive. That is how I am judging these setups. And if I do ape, they're going to be on the back end, right? So they're going to be when we confirm breakouts, similar to the setups I tried to run recently, yeah. So if you have a range like this, right? And boom, the range low is swiped, right? And then you get a pump up, and then you get a reconsolidation down. This is where the compound comes in, right? That's where the compound comes in. And I'm happy to wait until that happens, yeah? I'm not trading this market actively, and I haven't been for a very long time because I understand the dangers in doing it, really. You know, it's very, very easy to lose the macro sight in order to do so. So with that covered now, I think I can clear up this entire video. It was a long one, so I hope you appreciated it. There's no need for me to go over other charts, but to conclude, I am pretty much bearish in the short to mid-term, but I'm just looking to acquire spot at discount. If I'm wrong, then we could see the market slide to 13K, which I do not believe will happen, and I'm desperately on the lookout for signs of conflict of interest at prices of interest. Yeah, so when the average individual starts to sell his bags that he previously valued because someone has convinced him the value is not there anymore, that is where I'm looking to come in, right? And until that point, I'm not interested. You know, we'll be upgrading the coin list pretty soon, so please watch out for that. But in any case, I hope that was conclusive enough for you guys. I think I covered everything I could possibly cover, including how I expect this to manifest. In conclusion, we just need time. All right. If anyone has any questions, please feel free to ask them. But I'm going to end the video here and just going to thank you for watching this entire video today. Thank you for tuning in today, guys. Have a lovely day. Peace.